I think both, as I said, coming into this month, investors were looking for more clarity both around the US election and the pandemic. Since we've had that, particularly around the vaccine news, we've seen a very significant rotation from growth stocks into more value sectors. And while you say tech has underperformed this month, if you look at the year-to-date performance of tech stocks, we can see that clients and investors are reallocating into the other sectors. For example, here in Europe, you look at the Euro Stoxx performance has significantly outperformed the S&P and the Nasdaq, and then in particular sectors, you look at energy, you look at financials, and the performance this month has been very significant, whereas the year-to-date performance is still lagging tech by a huge margin.
Paul, I want to look at those two sectors in particular. You just mentioned energy and financials. And I'm curious your read on what's driven the rally. It was quite well known that those were two of the most unloved parts of the market. Investors were underweight both those sectors for a combination of cyclical and structural reasons. To what extent has this rally been the result of investors covering their shorts, covering their underweights versus outright buying on fundamentals?
Yeah, I think it's been a bit of both. Positioning has definitely been an issue. As I say, looking at both of those sectors, performance month to date, European banks are up roughly 40% this month, which is a huge move, but they are still down 20% on a year-to-date basis. I think particularly when the Pfizer vaccine was announced, if you saw the move in European financials that day, that clearly indicated that investors were underinvested. I feel from talking to our clients, investors were underinvested rather than short. So it's not like they had significant short positions in these sectors, but they were definitely underweight relative to everything else. And what we've seen in the last 2 to 3 weeks is the correction of that positioning as the vaccine news has given renewed hope to economies being able to reopen into next year.
What do you think of valuations in those cyclical sectors and cyclical stocks more broadly? Are there any cheap cyclicals for investors to buy at this stage?
Yeah, I think the outlook across those sectors is still very constructive. I think, as we touched on, from a positioning point of view, the positioning still feels relatively light in these names. And as we go into next year, having a more broader leadership to equity market, to a constructive view on equity markets is much healthier. If you think what we've seen since the pandemic hit in March and April has been within global equities, as you alluded to earlier, it has been that large cap tech space that people have effectively looked to invest, whereas now the options open to equity investors are far more broad, which in our view gives a much more healthy construct going into 2021.